What up, everybody? Good morning. Brand new week. Had a little bit of a pullback week. Volatility slightly coming back to the market. Now, we're going to see if we're going to get ourselves a second wave of that, or be going to continue this bull run going up. Monthly map, say we're still bullish. Can't wait to see what we get. Love y'all. See y'all in a little bit. Smash that like button while you're waiting here. Getting ready to get started. About to get the news going. We'll talk in a second. What's up, friends? How y'all doing? Good to see you. Happy Monday. We're back in the saddle here. Ooh. All right, we get situated very quickly. Aston Martin and Lucid today on the spaces. All right, everybody, double check. Question number one. DD bands. All right. All right, look at the CD bands opening rational across the board, looking pretty good. Start stable, market's looking great. VIX and Contango above triple B. Remember, above here, we know that means pivots are going to be overshooting and loose. A little bit of explanation of some of that stuff. Let me go over here to the platform tutorial. Wait, hold on. The trader reference guide. You come here, we'll learn some of these things mean. Every morning we talk about DD bands, outside doomsday band, triggered by any of these things being outside. Markets are rational. And then of course triple B. If you're above triple B, loose pivots and overshoots. If you're below it, razor sharp pivots. Means volatility is still somewhat present. Be very careful with that. All right, what's up, guys? Okay. All right, we got about 5 minutes to get started. Okay, let me explain something. Good morning. All right, so I love when I get this question. Yo, what up, schoolboy? All right, hey, dude. All right, let me explain this to you. This is one of my favorite things to explain. Okay, so it's your pre-market check. No index catalyst. Rational. We're good. All right, so I'm gonna use liquidity maps out the door. Pretty good. Okay, go back to here. Okay, let me explain something. Great question, schoolboy. I always love asking this one. Okay, there is a reason why SPX is not used for liquidity maps, and there's a reason that futures are not used for liquidity maps. You can say the OI might arguably be more important. It's not going to produce a good hedge pressure. It's not going to produce other things. SPY is the most liquid options chain on the planet, number one. So SPY gives you the best read of anything in the US stock market. Number two is that's not really the reason, but SPY being more liquid will have a perfect liquidity map. The second reason is that it reflects so much in the equities world. That is the secret to liquidity maps, to reflect all the risk of all the other derivatives in the same product. The derivatives of the same index, right? So SPX has an options chain, but SPX is a cash settled instrument. It doesn't settle in shares of anything. SPX is only cash flow. If I want to hedge my SPX, I can't go out there and buy shares of SPX. I can't do anything other than invest in cash or take side bets on stocks. Okay. So SPY is options chain. If I buy SPY shares, a market maker sold SPY shares to me and bought calls in SPY. The market maker bought calls in SPY from another market maker who sold calls in SPY. That market maker who hedge pressure is tracking the seller of the options. The options seller of SPY calls has to go buy SPY shares when those calls go in the money, looping him back around, being the buyer, or the puts being the seller to the original buyer or seller of the stock. All the hedging is internal in that loop with an equity ETF. You got it? So the idea that SPX settles in cash, it means that I can go hedge. I don't even have to hedge. I can just put money in my pocket. I won't create actionability for the market. I love that question, Schoolboy, because it's always such and it makes people go, oh yeah, that does make sense. Because on the surface, I would think the same thing. Where's the ES? I trade futures. I just want to see ES, or I want to trade SPX. But you'll see that all the hedging is here. Now, one of the things about why we don't do it in futures is we just don't, because if I were to buy oil futures and somebody sold oil futures to me and bought oil futures options settle in an oil futures contract. And you may have risk inside of that loop, but if I have obligation in an oil futures contract, then I can either go out there and acquire the futures to satisfy the options contract, or I can go out there and acquire 1,000 barrels of oil in the spot market. Again, that action takes place outside of the volume of the actual futures market, right? And on the Globex. So because oil doesn't loop back on itself, because I can go out there and hedge it by trading in the spot world. Those options are European, so they don't exercise at any given time. So I'm not obligated to be in any delta-based hedged position, because all I have to do is make sure I've got everything the moment they expire. And so European options, which are futures options, only expire at the end, and only can be exercised when they expire. American options like SPY can be exercised at any point in time. So hedge pressure comes in even more powerful because people are hedging in real time, because they kind of can be exercised on at any moment. So because of all of those two things, because SPY loops back on itself with SPY shares, and SPY also is American style option, you get a great read. All of that volume is internalized and everyone's delta hedging. Futures options, if it's an equities product, you're going to see the hedging escape, because a lot of it's not going to be taking place until the end anyways. And then a lot of what you're going to see, just repeating, is that with commodities products, I would rather do the USO, which is an ETN, or sorry, a USO is a commodity pool, and USO loops back on itself, USO options shares of USO, than actually UCL futures itself. Because people will go out there and hedge with the oil, and that half of the hedging leaves my visibility. That you're correct, Schoolboy. People might use SPX as a hedge for anything, as a cash hedge to like satisfy not losing buying power when a position's underwater. You know, it's almost like a cash swap. So it establishes a cash flow to you. To hedge a position. So you're not forcing people to go out there and buy and sell shares of SPX when you have options. You're forcing people to go out there and put money in your pocket, right? Essentially is what they're doing. So if I own a bunch of shares of stock and I want to go out there and buy some SPX puts, the seller of those puts is going to have to come in and make up the lost buying power I have if my stocks are underwater. essentially. They have to go out there or go out there and assemble an equivalent portfolio of shares of each of the 500 companies. Either way, those cash settled instruments, they make liquidity maps, but you get the pivot in SPY it reads for all of them. That's the beautiful secret of it. I love explaining this. Why did that do that? Load window layout. Oops. Okay, let's go. Bear short up. All right, let's open up really quick. Great, dude. I love that question because when you think about it, it doesn't make sense. Trust me, we've been through this before. Do we actually make liquidity maps or futures and hand them out? And the answer is we're not going to, because you're going to have two different hedge pressures. This is the one that really is accurate because it contains all the hedging, which is neat. Bear short up. We are in between the two, so bouncing off a hedge pressure resistance looks like it is today. No trade for me this morning. Everybody understand? We're bear short up inside of here. Resilience being barely positive. We might pivot through this box, and that's it. Takes a hedge pressure break to be bullish. Today's on up day, everybody. Today is a sideways to down day. Boo. Okay, that's cool. Another day off would be fine. Not for me. These like this for me. Bear short up again on the NASDAQ. Let's take a look at QQQ. We are against bear. None of these apply. We're basically below hedge pressure inside of here. I'm not going to short it also. This is, again, I know I hate to say it's a classic sit out day. I need to find a hedge pressure break to go to the long side. So this is great. I love waking up and saying no thanks. And this is the best thing to do, I'll tell you. You guys know I'm up about 500 and something % for the year. I'm not necessarily taking every trade I see. Chasing every single tiny little bird in the forest. Being a hungry wolf that I am, I want to find that big, fat, juicy, wounded pig to snack on. As a carnivore. BSU. So nothing looks great today. Everything looks kind of blah. Okay, that's kind of cool. I might just go spend my day building a trading platform. How about that? Inside of here, hedge to hedge. Now, this is not resistance to short from for me, but any breakout from here is a possible long when he wants. Today's not really doing much. Interesting enough to see. Resiliences are very much on the fence. At half gap, it means that is resistance. NASDAQ resilience going below. We have Russell resilience about to come out, I think this week or something. Futures coming out probably next week. I've already been playing with it. The Discord login called Connections, already here to log in. Hold on. Channel and spaces. So nothing yet. On hedge breaks, I might take it, but okay. Yeah, hold on one second. Check on spaces. Second, guys. All right, y'all. Sorry, I was on a space. I'm on a space every morning, Monday, every morning, Tuesday. I'm double booked. You guys know how it goes. When I talk on the smash that like button if you can, really quick, friends and family. All right. These days like this, remember, I don't do any I don't short personally. Number one, when DD's bullish, I don't short. Number two, I only short against monthly hedge pressure from the bottom. I don't even know where, way down here. So when we open above monthly hedge pressure, we call it bullish structure. Let me give you guys some tips. Okay, we'll go through really quick. If you haven't used Rocket Scooter yet, please let me know. I'll walk you through some things. So let's talk about some of these. Let's be like, hey, how do I get this Rocket Scooter? How can I sign up for this? I want to use your platform. You're the guy that said the market be bullish last October when everyone was shorting. And you're the person that says SPY's going to 500 now before it's double topping. I made a video last week saying that SPY's going to 500 before it's going to 400. I made a video saying that we're not going to bounce up and consolidate and be volatile. I said I made a video that we're going to have a parabolic squeeze to 500 SPY by the end of the year. So let me walk you through it. Why? Okay, gamma squeezes are what happen when you have hedge pressure breaks. They can move really quick to the upside. Monthly hedge pressure in general, purest form of market sentiment. All long-term positions are buying monthly options because you want to be in a stock for the quarter so that you can be on the ex-dividend date. Hedge funds and large institutions are like holding millions of shares of stock. They're going to be buying monthly options. Those are the options that reach out the furthest. They're going to buy those monthlies and hold on to them just to hedge your position. Like, I'm going to hold Apple for the year. Okay, let me buy Apple monthlies for like a quarter out or whatever. And they hang on to it. So the biggest sinks of money by individual firms, and their risk is all wrapped up in monthly hedge pressure because they're buying options on that scale that far out. Above monthly hedge pressure, it's bullish structure. Below is bear structure. Structure means that if nobody was trading or hedging or anything, like with any physical labor, the people holding all the stock and their monthly options and the robots just hedging those sold options, pressing the market is bullish gamma, as we say. And so in general, this starts to move this way over time, slowly. There's just a slow, gentle push of all the stock market pushing up. When monthly hedge pressure connects with price and price is trading below it, that's a reversal. That's a key indicator of reversal. We're so safely above monthly hedging. It's just bullish. The structure is bullish. The market's over, like underarching structure is bullish, like a magnet. Just presses it up on the month scale. You guys get it? So when you have breakouts to the bull side like this, and I tell myself, okay, this might be a good time to long the market, to be bullish. Any breakups of hedge pressure I can like to take along. I don't like to trade mean reversions that break out. Although we are breaking hedge pressures to the upside, that's also really good. You notice how even if I don't take the long or I miss the long, do you see how I wake up and still don't short? I still get it right by not picking the wrong side. That's a good key takeaway as a trader as well. Y'all follow? Keep an eye out, Matt B, as well for the open interest, because I forgot the open interest was in 2000. So think about the relative to the total open interest. Yeah, we have. So we go. Taking it easy today, y'all. When you see markets like this, up to you. Here's what we're going to talk about. So now, red lights means I trade small. DD is great. Resilience is great. It means we're supporting outside the box. It means we're supporting bull zone. And so today's it, right? Today, a long off a 363 bounce with a very small position up to some level. Good trade. Long here, up to some level. Good trade. We got to see where those levels are. Inside the box, there is no resistances. You can see that. Up here in the top left, DD band is the target today. There's a yellow line in the way there, so we might have some resistance on SPY. Like I said, or sorry, a yellow line right here. So again, I trade the next resistance because that's also in the way. I think I forgot to mention that today. That was my hesitation not to take the long. Always trade the next resistance. If the market's unclear and it starts off as a mean reversion, you get a lucky break. I trade the next resistance and call it a day. Everyone see that yellow line right there? Okay. So that to me is the end of the foreseeable day. I take a scalp if I were. It really didn't give me much of an appetite today. But also on Rocket Scooter, as you know, when those alerts are triggered, I'm trading small anyways. So even if I were to take a long off a hedge pressure, it would have been from here to there with 1 to 2 micros. I wouldn't have killed it. Wouldn't have cared much about it. Okay, so as you see, this is going to be probably a day. If you get used to waking up and saying, you know what, I'm going to have control over my positions and I'm going to sit out the minute I did, that's what you aspire to be as a trader. Not everything should be something you have to jump in and try to follow. You're trying to grow wealth over time. You're trying to like be a baller like your friend Matt here. You want houses, cars, watches, hotties on each arm, boats and hoes. You want all of it. Y'all learn to not trade when you don't like what you see. Yeah, Matt, we got to rank up in some Halo for sure. Yeah, because I gotta. Okay, so questions you guys have? Now I'm on a space. So Monday morning I'm on a podcast. Tuesday, Monday morning I'm on 2 podcasts actually back to back, and I have this. And Tuesday morning I'm on a podcast. I do other things around the thing, so they have to talk and. Monthly map shows a non-volatile month, a non-volatile week, and still continuing the bullish side. Still continuing bullish. It's great. So monthly map showing the bull side still being strong until the fall. The bear side being severely weak until August. So what monthly map is painting is a picture of a short squeeze, a parabolic short squeeze. I can't wait. I'm excited about. Super excited about. I love it. I can't complain. Any longing from here to break through yellow line as a trade 2DD band, about 44.20 would be the upper limit somewhere up in here. I'll draw my drawings back on here. DD band is about right here. Give or take. Looks like SPY and Nasdaq probably gonna hit first. I have my DD bands up here. I do like what I see, actually. This is where taking a few micros on, then that's probably worth it if somebody is a scalper and you do trade. Obviously, we have our red lights. I trade small when the lights are red. All right. Does the liquidity map change throughout the day? The map doesn't change. The letters change. So the map is where, imagine map like a treasure map. Here's a rock. Here's a tree. Here's another tree. And X marks the spot. As you're walking through different parts of the map, the letters change. So as price moves from bear zone to bull zone, this will alert you where you are. It's telling you right now that the pirate walking with the map in their hand is now walking in the bull side, the long side, the upside. The letters change. Yep. The letters change because where price is relative to this. The letters are giving you a key as to how you analyze the market very quickly. So BLU tells me now I'm going to come where we were mean reversion, which typically presses to the middle. We popped into bull territory, and now we're in BLU that looks like this. So now let's reanalyze it. BLU has support at the bull zone when DD is greater than 0.6 when an irrational market. We study that here. BLU has upside position until we hit next resistance, which, what is that? The only resistance we have now in this BLU is DD band at the top. Support would be the bull side now. If we start losing bull side, then there's no trade. So if you open above hedge pressure, which we didn't, then you could V to open. Open V open is a trade, but we don't use that because we didn't particularly open. This is the open in the morning. We didn't open above hedge pressure, so there's not that natural. We gapped in bull territory. It's going to rally. Instead, we broke into it, so this is the only thing that applies. We're trading up to next resistance. So now we're in BLU. I'm looking for the leg that says you hit a resistance and you stop. That's how that works. So letters just tell me when price breaks from one to the other, you just put your eyeballs where it is to look for, okay, where's my next resistance? And that's what that's telling me. So as you see on the liquidity map, there is no resistance. I don't see anything right here. So I have to go through other tricks that we teach. We have things called yellow lines and red lines. Not in the platform automated yet, but DD band is usually the next resistance I look for, and that's pretty solid for the day. Y'all see that? The DD band is not automatically added. It will be when we have futures. So the next step that we had on our platform is to release futures and futures trading, which, by the way, if you are in Rocket Scooter, you need to sign up for the Pro trial, but you have to upgrade to the Pro Plus to get futures when it comes out. It should be about a week or so. I'll have it to play with, and then after that, I'll release it to everybody here. You'll click a button. You'll have a connections tab. You'll connect to one of 80 different futures brokers. Go buy your futures data from them, and it'll tunnel all your futures data through here. And within a week or two, we'll have all the futures techniques automated. So I'm super excited to have that launch up. Meta hedge pressure, monthly hedge pressure getting fixed. I know, right? We've been barking up that tree for a very long time. The data providers keep saying they're fixing this and fixing that, and nothing's changing. So Meta's a weird. It's a weird index from like the old Meta. The old ticker that had Meta. So the numbers for Meta come in very, very weird. The hedge pressures come off. Meta's always been weird like that. And what happens is it's some kind of they're doing something weird. Yeah, trust me, this is all of our data provider here. I know. I don't understand your question, Alexander. Let's look at some stocks. So to answer your question, everybody, why does the liquidity map change? Does that make sense, Simon? Because when price is moving from one side to the other of hedge pressure, it'll say S if you're below hedge pressure, L if you're above. So if the market has enough natural buying and selling to break through the structure, your brain needs to shift from like a bear side to a bull side, and the letters kind of walk you through one to the next. So this is the natural pressure of stock. If you're inside of the map in a certain way, where like if price is inside or opening inside the map, these are the pressures you expect if there's not a lot of human choice making or human interaction, right? If just robotically the market were to gain some momentum on its own, this is where that pressure is pushing of all the hedging that's there. But human trading can also come in, and people can just change their sentiment and buy enough to break that structure. When they do, if I was trying to short against here and it broke through, I'd get out of my short really quickly. If I'm trying to, if it breaks through in longs, and I'm gonna look for what happens on the long side, and my brain would go from one next. So when these letters change, I clearly take note of that, because we're in a new hedging area. It's kind of like I like to think of it like a skateboard ramp is the best way to think about it, or a half pipe. I mean, I used to skate. Think of it like this, right? You have a half pipe, and skateboarder, you roll down, you go up, you come down, you go up, you come down, you go up, you come down. And the minute you get enough, like, speed and you pop over the other side, you're on the other side forever until you build up enough speed. You don't jump back over here. Right? You have to literally, like, give yourself extra momentum to go up and then lean forward and come down. The minute you pop over that ramp, here's that ramp right there, it's a new regime. So now you're on this side of the ramp. And so, like, this is if you look at why I say skateboard ramp, this is actually what gamma looks like. Turn it on the side. So gamma looks like this around hedge pressure. This is maximum gamma of sold options to dealers. So now we've had enough buying pressure to push on the other side. There's a net speed up of momentum that can go that way. There's a resistance that goes that way. So now the human buying out the door was enough to pop to the other side of that half pipe. So it could squeeze higher from here. It doesn't just break out and continue to fly. If it hangs here and there's really no activity or no volatility, it would pick up steam over the course of the day. That's why the letters changed. So DD bands will automatically be added, but you have to be in Pro Plus. So do me a favor, everybody. If you're in the trial's great. We love the trial. We give you guys the trial for $35 a month. The trial's for Pro only. Pro only won't have the option to connect to a broker. Pro Plus will. Pro Plus is the final upgraded version. And Pro Plus is normally $199 a month. And you guys getting the Pro for $35 trial for 3 months. Let me promise you something. At the top of your platform throughout your trial, you will see a pop-up that says offer now. You click that, Pro Plus will pop up, and it's going to be under $100 just for the founder's fee. We're about to close the doors on that. So if you're not in Pro Plus when they close the doors, then you have to go at full price. So if you're in the trial, you can get that deal if you upgrade when that pop-up's there, but once the pop-up's gone, it's gone forever. So you can get Pro Plus, which means access to everything for still under $100 now. And we want everybody to know that, as we're building our initial launch member base, we're rushing the 5,000 user accounts right now. So we just broke the 4,000 barrier last month. We're excited to be this big. We're about to get rid of all these awesome deals. So we have this really cool crew. Everybody's joining that Pro Plus thing. And then when futures come out, it'll just launch with your platform. You don't have to upgrade anything. And the price stays the same. Whatever deal you lock in is yours forever, which is great as well. We want to have like this really cool founders fee for people that join early birds. So lifetime for Pro Plus. The lifetime, if your deal pops up, it'll tell you on your pop-up, Schoolboy. Yeah, and lifetime would be great, and we appreciate everybody that wants to buy out the platform outright and obviously support the development. Obviously, we have 22 mouths to feed in our company, which they all thank you for supporting us. When you have the lifetime purchase, it's normally $29.99, $3,000, and that's also going to raise when we get futures and options and stock trading. Lifetime's no longer going to be $3,000. It's going to go up to the $5,000 range or maybe even higher, depending on the different features that we add to it. But lifetime now is $3,000 minus some kind of discount based on your pop-up. Sometime in your first month, you'll see a pop-up. Sometime in your third month, you'll see a pop-up giving different deals. The earlier the deal, the better it will be. So don't wait. It'll get less cool. It'll come in under $3,000 if you see it pop up. So that's great, and that's for life, and that's lifetime feature access for everything. We appreciate you guys, especially your lifetime folks. We're about to cross our 1,000th lifetime number in the history of all of my companies together, which is amazing. Love y'all to death. Yeah. Let's take a look. Let me get this market. Tesla's pushing pretty good. Let's get Apple. Just hitting that red line and pulling back. Market, we need some steam. Let's go. Obviously, we're going to see this is one of the techniques. And yellow lines and red lines are going to be one thing we're going to automate as well. This is a clear as day resistance that you will see in this market. So obviously, it's going to take a little bit to get out. But if it does, then we got a nice pivot from here. Things are getting strong. Resilience is strong. You know, like I said, if you took a bull long right out the open, probably doing pretty well right now. I usually only trade to next resistance. When you open in bear zone, you likely close in bear zone. But when you break hedge pressure, you don't normally come back to the other side. It'd be very rare for this to not support bull side now that we're in the bull zone and BLU. So DD shows bull side support. This is now support that we've broken into there. So if I miss the first trade and I want to trade here, I'm going to trade very small to the long side to there. The R&R is really good. I can get a good return on a very small risk. I'm okay. I like the actual setup now for the long. This is a great long entry point right now. Perfect long entry point. Yellow line is giving us a little resistance there, but everything else is looking good. NASDAQ has a DD band probably about right here. Hold on. I'm about to talk on the space. Oh yeah, things are looking great now. Market stabilized. Most of the stocks that had gapped down basically jumped up and filled their gaps. You got the resilience numbers now. What started off being like right at zero, the S&P is now 45%. NASDAQ's now 83%. Anything above zero is bullish. Even when markets are irrational, I give it a little fat. Anything above 10 is bullish. And so market completely turned around today. There is no volatility on monthly maps. This is one of the key takeaways. There is no volatility, and we're getting gamma squeeze to the upside, which means whenever I see markets move up with no volatility, I tell myself there's not going to be a pullback. I always a lot of times I scare myself out of a trade, right? Because I say I'm going to wait for a pullback. It's just moving too high without pulling back. Well, volatility is the degree of pullback. Higher volatility, the bigger those V's are. There is no volatility at all. As a matter of fact, UVXY went through a reverse split. That's how non-volatile the market is. VIX is just absolutely collapsing and crushing. This week, monthly maps show that, and that's one of our features too. If you haven't seen Rocket Scooter stuff lately, anybody here, monthly map is something we built this last year. And what it is it actually forecasts 3 months into the future of where the risk is distributed. And what it does show is where the pivot, the inflection point is in the market. We're bullish until October. Now, it's not going to just be a straight shot there, but the market does not lose any bullish positioning until then. And the bears are also getting squeezed between now and then. You can see that as the options start to roll off the risk landscape. What a great feature. And it also can show you how volatile the market's going to be week after week. And it shows absolutely no volatility for this week. So when there's no volatility, markets are going to move pretty much in a straight line. If the put to call ratio is greater than 1, high volatility typically means sell-off, and low volatility tends to mean rallies don't pull back. So as we're seeing that right now, this is the degree of what I see. The market's broken to bull side. QQQ's broken that key hedge level. IWM's broken through hedge pressure. It's likely to creep up with no pullback. It looks like today's secondary targets, NASDAQ has on the future side about 15,170, give or take. S&P has a 4420 that I'm looking for. It has now upper targets on this tiny little breakout. But even so, if I were to take a long, it's always small on these breaks, because if it breaks with no volatility, it usually is a straight shot. So I don't need to put big risk on the table. Things look good though. Things look good until the fall. And I remember Evan, like last we talked about a quarter or so ago, we were talking about, we knew that we'd have a really awesome earnings, right? And I was like, you probably have good earnings and bad earnings. I think Evan was one of the ones that told me he thinks that we'd have 2 good seasons of earnings. I think Evan actually nailed it, because as monthly maps have shifted over to show the fall is where the bearish inflection comes in. I think next earnings season is going to be a blowout too. It's going to completely surprise and shock everyone. So I got to give Evan some credit for that, because he called it last earnings season. I think the GDP going up is very good proof of that. So I think we're going to have a more bullish fall and summer than people expect.
Really nice rundown there, Matt. Appreciate you sharing some of the insights, especially around the farther out picture the market here is by. Still pushing up here a little bit.
So no volatility today, right? UVXY went through a reverse split, so we're not going to have a good read until today. So it's going to be hard. You're not going to have any data for UVXY. All those, you're going to have shit still down here because we need a day of trading and the new price to get some data. So here's the thing, like most people are going to be scared to be bullish because of all the bearish rhetoric. This market's not going to pull back. No volatility means it's not going to pull back. And I just so like look at this. The space between bull and bear zone is very small. Look at SPY. There's no volatility. Very little until July. NASDAQ gets a little volatile. So what you're seeing right here is that NASDAQ's likely to have some pullback as people likely roll into Russell, which are going to show the difference here. Russell, very strongly bullish with no volatility. You see that? Russell has no volatility. And what's meaning is that Russell's looking to finally be the thing that breaks out now. So you're going to see some healthy pullback, which is good. That's it. Yeah, well, let's talk about that, right? Great question. Hold on one second. Take a look really quick. A little bit of downside resistance from that. Do you have any news or something come out today? No. A little rejection there, a little drop off yellow line. That was a pretty decent dump on SB. Wow, 10,000 contracts, 12,000, 13,000 contracts. Interesting little VWAP drop there. What's going on here? Hello. Platform. Give me a second. My platform's frozen up. My browser crashed. Yellow lines are still really strong. You guys see that? See how strong those are? Those are really strong resistance points. They always are. That's why even if I do take a trade, I don't chase it with a big position, right? Because you have a lot to get through. Okay, let's get right back here. Falling right to support, back to the mean reverting level. This is a pretty large candle, right? Came off of there. That's that yellow line resistance. That's all futures right there. Futures rebalancing. There's not a lot of volatility building up, so I don't see the market from here finding any momentum to the downside. So this is the entry point if there is one. I'm gonna decide if I want to get. I'm probably gonna get in on this actually. I'm going to buy this dip with a couple of micros, just a couple. I like what I see. DD says hold still be resistance at hedge pressure. I hope to see that. You like the half pipe analogy? Makes more sense now. Like once you get that momentum to finally kick over to the other side, you see how when you touch hedge pressure, there's a volume spike. You break through, boom, boom, bullish, and then it just keeps going. Like this is that entry point. I'm gonna act on this one. Let me maybe see that. So hopefully we get a run off of this. Gotta grab me a couple micros just now. Pretty decent run up. Let's go all the way up to my DD band. I had futures showing because you see in Schoolboy, right? The idea that we use futures to pivot on certain things, and we use equities to pivot on certain things. We take a full view of the SPX by staring at where SPY has a liquidity map and where futures have these other pivots, right? So there's my SPY, there's my futures, right? Futures have different calculations we do. And this will all be automated on Rocket Scooter when we get our futures data. So while the SPY liquidity map is bullish from here, futures have a couple resistances along the way. So I watch both of them together side by side. Does that make sense? So when I'm trying to trade the SPX or the S&P or any kind of S&P derivative, I'm looking at all of it together, side by side. Why does it mean the UVX had a reverse split? Well, because when a stock becomes so, I forgot if it's like $5 or $4, there's a limit that the NASDAQ and the S&P, New York Stock Exchange, has for a stock to be traded on the exchange. And when you become a penny stock, you reverse split. So you have fewer shares, therefore the price goes up. So VIX by design is in decay, and ETFs, hold on a second. Hey, what's up? I can hear. So like by nature, VIX is in decay because VIX has everything to do with the distance as options expire as you approach them. VIX just naturally is always in decay. An ETF by design is always naturally in decay as well, which must be rebalanced every day. So UVXY being both of those things is perpetually in decay. When it decays to become a penny stock, they have to reverse split it so that it doesn't get delisted so you can still trade it on the exchange. So a reverse split is just a sign that something has lost so much value, they have to consolidate the shares. Reverse split doesn't have any action per se. I know people like try to think like, oh, it's a reverse split. That's a good or bad sign. It's not any sign. It's just a sign that it's lost so much value to date. It's not a sign it will do anything today because of that. But the fact that UVXY became valued at $1 means it's just VIX has just collapsed so hard. There's no volatility in this market. It's a testament to the bullishness of the market, the liquidity of the market, right? Liquidity is the inverse of volatility. So this market's extremely liquid. Now, let's talk about it. You have traded from trial to pro. Am I too late for Pro Plus? You are not. If you need to access Pro Plus right now, send me a message in Discord. You're like, hey, I want to get that cool Pro Plus deal. I don't want to miss out on futures. Let me know. I'll upgrade you today, even if you missed the pop-up, because for a while we didn't have the pop-ups in the platform. They're on the dashboard and you might have missed it. So if you don't have Pro Plus, all the futures comes out for Pro Plus, and we'll have a small deal for that. But then we're going to have this grandfathered in rate that we have before futures comes out. That's going away. So you must lock that in before that goes away. Just letting y'all know. I bought the dip with a couple micros. Hopefully run up to green line. I'm up like $300 or $400 right now. Love it. Can't complain about some gains here. I was just sitting there waiting like, I don't want to take it. I saw that DD's greater than 0.6. It's got that nice little break. Here's my support. There's my stop. I've got a pretty decent run from here. I've got a 20-point run with the 10-point stops, a 2-to-1 trade. Can't argue there. And I got a couple micros because this mofo is red. That's it. All right. I love y'all. Can you tell me about the alert box with the red indicators? Simon. Okay, great. We have irrational rules, which is part of our training. So not only do you get access to the platform, we're going to teach you how to trade. And arguably so, I like to toot my own horn here. We're the best trading bootcamp on the planet. You will learn more here than any 5 trading communities combined. How to trade. The first thing you will learn here is risk management. In our risk management module, there are 5 things that we teach that are proof that the market's random with margin calls. An example here. SPY hedge break is red with an arrow. There's a video on hedge break. Let's pull up the video. Okay, here they are. There's a summary and then what is a gamma and delta squeeze. And what you'll see is that anytime you open above hedge and break through it, it's irrational and turns red. Red matches red. It tells you if a break happens, it's irrational, and what irrational markets do. It's all in these videos. Irrational markets are random with margin calls. So these lights coincide with how much I'm going to trade. So these are position size lights. In the cheat sheets. I thought I had that down here, but it's in the cheat sheets. Let me drop it in there real quick. Platform tutorials, cheat sheets will have the same thing. The alerts represent the colors. Let me put that in here as well in the risk management section. Let me cover that real quick. Put the cheat sheet in there. I thought I had it in there, but I'll just drop it. It's a repeat from what's in here, but it's good to have. Okay. So what you see is that the lights represent how much I'm willing to trade. If it's red, I'm going to take a 10 to 20% of my normal position I take, and I would trade very small if I trade at all. Usually I'll sit out, but if I do trade like a good break like now, just a little bit. If I normally get to trade 10 minis, I'd trade like 1 to 2. Very small. Yellow means I'm going to trade half. Green means I'll trade my normal size. So right now, when those lights are, so we have 5 irrational rules. 3 of them are programmed here in equities. The other 2 of them are programmed here in equities. The other 3 will be there when futures come out. So that helps me see that, okay, hedge break to the upside. Markets are irrational and random. If I do want to trade, I'm going to trade very small. That's all it means. Does that make sense? You love the system. Your circle of friends are all caught up in order flow and reading Dom. And you're 100% right. And I'll tell you, order flow. Hold on. Yeah, I'm here. What's that? What was your question, buddy? Hold on 1 second. I'm on a space. Do you guys follow that? So what we do, Schoolboy, we actually predict order flow. We're a step ahead of all of them. Imagine people that read tape. Go tell all your friends this. We have a system that beats order flow. Imagine unusual activity in all the other black box stocks and all those cool ones out there. Trading ticks and whatever. Unusual flow, unusual flow. Here's your unusual flow. Hedge pressure. Anytime you touch hedge pressure, there's a volume spike. I'm playing the unusual flow at the start of the day. I know where it's going to be. I beat all of those systems by getting ahead of them. So it's a too narrow view of the market. I agree. And you have to react when it happens. Imagine knowing that you're going to get unusual flow at 433.5. You hit hedge pressure, you're going to stir some activity. So we are the leg up to that style of trading, which I love. And you can tell your friends that. And I 100% agree. You have to be a tape reading expert, and therefore it's also, there's no actionability on it, because you have to take a bunch of guesses. Was that order flow to the buy side, to the sell side? Is that bullish? It's bearish. And you're forced to analyze it in real time. And it's really hard to do as a new trader. volatility there, I don't try to short. I need a resistance to short from, and I need to short it to somewhere. And with our DD number being strong, bull side's likely to support. 363 is it. SPY's probably going to hang. Resilience is strong. Everything's strong. That little, 12,000 contract dip on the SPY did nothing, or the ES did nothing to really shake the market up. The market's just rebalancing and buyers stepped right in. So I'm not really looking to short this or look for any. I don't try to play reversals. If the trend's bullish, I'm bullish, and if it's not volatile, I try to find entry points the best I can. But nothing today is really, I don't know. I don't see any signs. And again, if I don't short something and it falls, I didn't really miss anything except for a lower low for tomorrow, right? So specifically, we're still above hedge pressure. Everybody takes their hand off the wheel. The market's just going to gain a little bit of long pressure on its own, but doesn't mean I'm jumping in all in long for this either. So just playing it real safe today.
Okay.
Yeah.
Sounds good. Matt, I wouldn't be surprised to see it pull back to hedge pressure, though. It does have a little bit of a knack for doing that. So QQQ right now, yeah, you can see drop down just a little bit here. It's at 363.96, essentially based on my
Right, I'm back.
my prediction. I am looking at 363.
Yeah, so today I'll position with small sizes. If the unlikely thing is going to happen, hedge pressure breaks are about like 11% chance. The unlikely thing happens. If the unlikely thing happens, then the move is likely to be big. With no volatility, the move is likely to be wrapping up and be big faster rather than later. We're not going to have a choppy day. So that's how I see. If it goes up, it's going to go up and it's going to go up big. And I don't need a big position in a risky environment to get anything if I try. So a couple micros, I'm up or down a couple $100 today. I'm right or wrong. It's not going to be a big deal. Exactly. Is there a special for purchasing lifetime? There absolutely is. If you are in the trial, send me a message. Everybody send me a message right now and say, hey, I'm in the trial. I'd like to get Pro Plus or I'd like to get lifetime. And I'll make sure as soon as I get off the stream, I'll hook you up. I'll hook everybody up today with the deal to make sure that you're in and situated and you go through all the Pro Plus videos, which there's like 30 more videos you'll have access to, and make sure you get situated for everything futures when it does come out. So it's QQQ is BLU. You skipped your short reversal signals and took your longs, 2x your daily profit on one mini contract. Brett, let's go, baby. Let's go. And I appreciate you, schoolboy, man. That's awesome, dude. I like when people... like you have a bunch of friends in trade and now you're going to be like the superstar of your friends because you're going to go in there and you're going to have a different view of the market that's not chasing. Imagine with order flow stuff. And then nothing against like my friends over there. Trust me, I'm friends with everybody at all these places. All the tech CEOs, when we go to conferences and shit, we drink together. We're all friends and I love everybody at all those companies. Not dogging that analysis. The fact that people look at order flow and people look at the depth and look at those things, it means that they're looking at the right things they need to be looking at. However, actionability, Rocket Scooter is just winning the space race right now. There's nobody even close to being able to identify dealer activity. There's a bunch of people claiming to do so. I've become aware of some people copycat our marketing with scam type shit that's not. I saw somebody sent me this thing the other day and was like, what do you think of this? They sent me this thing that was like an options heat map. An options heat map, and I'm not calling out anybody, but an options heat map is just they take the open interest and multiply by Greece or something, and then here you go, get GEX, one of those things too, and those indicators are completely useless. They're a step in the right direction, but on their own, they don't do anything. They're noisy. They don't really represent dealer positions, but a lot of them say dealer position. We'll show you where the dealers are. It's totally bogus marketing. I will teach you how to make an open interest heat map. No offense. I love my friends at Spot Gamma. I love my friends at all these other places. If you see somebody that offers you something like it shows on the axis strikes, and then you see like up and down, like areas of puts, areas of calls, and whatever, don't go buy it. I'll teach you how to make it in 5 minutes in Excel. Get Thinkorswim in Excel. They say it's dealers. It's nothing dealers. Open interest is not dealers. It's bogus marketing. So People have found out that we're the hottest growing thing on Wall Street, and they're changing their marketing to say dealers, and it's bogus. I love that people are trying to copy the effectiveness, how fast we're growing. But dealers, if you were dealers, you'd have a clear bull and clear bear zone with no fuzziness. I literally see this out there. Like you see, and they go, no, it's probably bearish, like right there. What? Here's rocket scooter, you turn it on its side. Literally, neither. It's clear as day. Bull and bear side. It's not bull bear, bull bear, bull bear, bull bear. You do open interest, it's gonna be garbage. And a lot of, and people say this is the dealers. It's not the dealers. It includes speculations, speculators, everything. So you have to be careful, like trying to look for something that's not what it is. I always say that. So we are creating a revolution in the analysis space. There's a lot of people out there that are looking for the next big thing, and monitoring dealer positions is the next big thing. So having the ability to monitor where high gamma will be, where the dealers actually split their positions one way or the other, is what we do that's different. And that's what I want everybody to take note of, is that actionable points are what's missing in traders' diets. And being able to know where unusual activity will be at the start of the day, high volume spikes will be because of this dealer positioning, is what gave us the leg up. So we're really excited to present this to everybody. But it's very flattering to see people, they're like, oh, these guys are getting huge. Well, let's also call our options heat map dealer position. I'm gonna put ads. My followers are like, I'm seeing ads for the service. Is it kind of like Rocket Scooter? And I'm like, no, that's just options heat map. Pretty simple. Take the open interest, multiply it by a Greek, get you some noisy numbers, turn them on their side, and there you go. There's hedge pressure on Qs. So there's a special for purchasing lifetime. The thing with lifetime is great because everything that we release going forward, you'll get access to as a lifer. So lifers, one-time purchase, and you'll never have to buy anything again from us. The one thing you will have to always buy is your futures data. The one exception to the rule is you have to buy data. We're not going to be giving you all your data for free. Sometimes to upgrade your data, you might have to go in, even as a lifer, to pay $10 or $20 a month for your data. That's pretty standard across any trading platform, though. Depends on the price of the data. So futures, we're not going to sell it to you. Futures, you'll need to acquire it from your broker. Typically, it's about $10 a month. Not a big deal. Options, we might distribute options to you, but again, we might also charge you $10 a month or something modest. Have data, real-time data. So if you don't like an options ladder, you should pay for the data. And every broker, that's how it is. So as much as I'd love to hand out data for free, it's very expensive to buy that data to turn it around. So we might have to charge you a little bit extra, but you don't have to pay anything else to us again for new features or new releases. At minimum, it would only be futures data and options data. Lifetime would not like remove that obligation if you want that real-time data feed, of course. But like I say, moderate. The estimated magnitude of $10 a month. If the exchange charges us and say you got to charge $10 a person, then we got to charge you what the exchange tells us because they charge us for you. So when futures roll out, Rock Scooter, SPY for chart, show DD and SPY, or show on the ES chart. So great question, because we haven't told our developers how to do it yet. The way I'm going to do it is that you're going to have ES as its own chart and SPY as its own chart. And for about a month, while we're building everything, I'm going to roll everything for futures out to futures. And everything for equities, I'm going to roll out to equities. So I'm going to only have liquidity maps on equities. And I'm only going to have DD, yellow lines, red lines on futures. And they're going to be side by side. I'm going to teach people and stream it side by side for months. So everybody learns that's how it works. And then we're going to create what's called a blended chart. Blended chart will be that you put it all on one. You want to trade ES, so you want to convert everything to ES, or you want to trade SPY, you want to convert everything to SPY. Then the blended chart is going to have additional training. And the blended chart, as you know, anytime you convert something, it's going to dance around. So DD bands are static on a futures chart, but if I convert DD bands on NQ to QQQ, they're going to wiggle around like my mouse is moving right here, because the ratio is never like 1-to-1. So when you see like that, you don't want to stare at a bunch of moving lines. We're going to have to write an algorithm to change the sensitivity of how often they update based on how close you are to it. So an example being that when you're really close to hedge pressure, and pretend that this is a futures chart, right? Every 2 seconds, our platform updates. So you don't want to stare at like a bunch of dancing hedge pressures while you're trying to trade. It's really hard to do that, right? So you're not going to want to see that. So it's only going to move around when you're actually at the line. But see, that would be very obnoxious to trade with. So reality, what we teach you is to look at both of them side by side. There's really no reason that you as a trader is going to want to blend them up together, because you're going to give yourself a headache. You want to stare at the static one here and stare at the static one there and not really blend them. If you want to save real estate on your screen, put them side by side. But if you have to have that blended chart for whatever reason, hedge pressure, if you convert hedge pressure from equities to futures, it's going to dance around. I don't want to deal with that. Right? So do y'all understand when I say dances around? Because if you put SPX divided by SPY, you would think it's 10-to-1, right? Because it's about roughly 10-to-1. It's never 10-to-1. It's like 10.01 to 1. And then the next tick, it's 10.03 to 1. The next tick, 9.98 to 1. It dances around. The ratio between the two, they stretch from each other. So converting them, they're going to dance around. Do we all understand that? So you shouldn't take the things you calculate independently in futures, convert them to something they really just loosely track. We can if you want it, because people are like, well, I want it. But you have to understand that you're making your life more difficult having to trade against a moving target. Does everyone follow that? You understand what I'm saying? Like hedge pressure will stay flat all day in SPY. If this was an ES chart, hedge pressure would be doing this. If I were to take the SPY hedge pressure, because it's calculated in equities, and convert it to futures, as that ratio changes, it's going to dance around, right? You can't trade a moving target. It's really hard to do. So by telling yourself, I kind of want to simplify my approach, you're really making it harder for yourself by combining them. You want to keep the future stuff isolated from the equity stuff, I promise. If you don't want to listen to me, we're going to create the blended chart for people. We will say liquidity map. There'll be a button you click that says futures equivalent, equities equivalent. You click futures equivalent, and boom, your DD bands will pop up here on SPY. Your yellow lines and red lines will pop up on SPY. Great. Another thing is that if you were to have a futures chart and you want to put your liquidity maps on the futures chart, what's hedge pressure with S&P futures, then hedge pressure will dance around, the walls will dance around, half gap and open and close will walk around, because these are calculations done in equities. And so we have an algorithm that we've pseudo coded that will keep the dancing to a minimum to like save your eyeballs. Crazy market sell-off today, right? Oof. So you take a couple micros, the market's irrational, got my stop loss in, I'm out, right? Isn't that crazy? So because those lights were red, I didn't jump in super heavy, then take a lot of risk and took a long on that dip. Didn't work out, close it out. Easy as that. Practically lost nothing. It's not moving targets, it's dancing targets. It's different. I'll explain to you. I mean, the moving targets are great, but let me show you some cool math. All right, let me make a little spreadsheet. Let's do this, right? All right, let me pull something up. Let me say something cool. All right, well, let's see right here. All right, so here is the conversion. This is just my prototype sheet from the original hedge pressure stuff. Look at the conversion target. Here is the ES equivalent of a SPY 350. Look at my chart right here. You see where my mouse is? Make it really big. The ES equivalent to a SPY 350 target. Ready? This is what if I were to take 350 hedge pressure, this is just a random number that's sitting here. I think it just input 350. What's hedge pressure today? 433.5. Watch this. So what's a static thing in SPY would change just like this in futures. Look at how far off it is. 4 cents, 38 cents, 44 cents, 39. It's dancing up and down a whole dollar, 2 ticks, 2, 3, 4 ticks. You see how noisy that can get when you're trying to trade? That ratio changes around a lot in real time. This is the ratio of S&P futures to SPY. So the moving target can be anywhere 2-3 points of range. So it makes it hard to like pinpoint your accurate position. So the noisiness is really bad. You follow? So we're going to give that to people who like that. But imagine your walls dancing, your half gap dancing when you're trying to trade off of that box. So you don't want to convert like all the liquidity map stuff, half gap open close, hedge pressures, all of that to futures. You don't want to convert DD bands, red lines, yellow lines to equities, because everything you convert is going to move around a little bit, even though it's static and SPY. So now this is explain the dancing. That would be what hedge pressure at 433.5 would look like on an ES chart. You'll have about where it is, about 43.91, but it's going to go up and down a point or two. Whether you like that or not is cool. Now, what it'll do is it'll actually like, be annoying. But what we're going to do, we have a neat little algorithm that we put, is that our platform updates every 2 seconds. Okay. Seconds. So the converted things are going to be like futures DD band, right? So the idea that I had is that the farther away you are from it, the slower the update time. So like essentially if you're to turn your head on your side, there's going to be a chart like this, a sensitivity transform we're going to apply to it. Remember transforms, all of you mathematicians out there. Turn your head to the left. The sensitivity will be infinite and 0. So infinity on our scale is equal to 2 seconds, right? Infinitely sensitive, we're going to update every 2 seconds. The closer you are to it. As you get further away, it's going to decay very rapidly. To 0. Our 0 quote unquote scale will be every minute. How often it updates. So the further away you are from something, it'll only update once a minute. So it'll only dance every minute. As price gets closer to it, it'll update every 10 seconds. As you get right up to it, it'll update in real time, 2 seconds. That's how it's going to work. Does that make sense, schoolboy? That's how it's going to work. So something far away, you don't want to be staring at it moving around because it doesn't apply to where you are. As you get closer to it, it'll update faster. And we're going to apply this this first order differential transform, which mathematics Hurt equation in linear algebra. So like I basically am going to add a transform curve, which if you know a exponential chart is the solution to first order ordinary differential equation. All you mathematicians out there will be like, ooh, I remember those things. So essentially, a sensitivity curve is going to be applied to the frequency at which the platform calculates the updated value and distributes it to you through its WebSocket that you connect to every morning. The thing that says connected, you connect to a web stream that connects you to a data flow. The difficulty there is for us to calculate a new indicator. We'd have to have a new indicator. We'll have like hedge pressure, which is the regular one that you get broadcast to you. We have to have hedge pressure modification, like hedge pressure M, that we also broadcast as part of the WebSocket connection. Laplace, JK goes, oh, Laplace, how I don't miss you. Every engineer in the world goes through their applied mathematics class. You learn about your Laplace transforms. They're useful to solve very complex systems with advanced relationships with thousands of inputs and outputs. You want to make linear. The word Laplace was like a big hurdle if you hated math. Essentially what it did was it took differential equation, which is like an equation that's equal to a part of itself. Like the function is equal to the function is equal to itself. It compounds on itself. You can't solve it linearly. And Laplace was a way to take massive differential equations and simplify it into like an algebraic transform. You apply those things, make them a little easier to draw your relationship. Transform, we use these in plants all the time as an engineer. Ideally, a sensitivity transform that will update on the back end a modified hedge pressure dependent on how far away are you from the price. I will give you an update. So like when you're inside, the thing is that when you're inside of redistribution zone, how crappy would it be for it to just like stretch and squeeze and bounce all over the place? Really hard to be actionable converting it to SPY. But if people want it, I'll give it to them. I will never use the blended chart. Let me explain something to you guys. Pop and Matt never gonna use the blended chart. I think it's a stupid idea, but people want it. For whatever reason, I'd rather stare at the static one over here in futures and stare at the static one in SPY here, and my eyes just go from left to right. Relying on moving targets, but at least you won't be seeing like everything dance around all day long. It'll start to look weird. So the sensitivities help make it look better so that you're only really like looking at the thing you're approaching. Okay, that's the one that's moving. And then everything else away from it's sitting still. Schoolboys are in a few indicators in TradingView. You know what you're talking about. You have to anchor some calculations to make them actionable. And you nailed it, right? So the perfect 100% anchoring is to literally have S&P futures here and SPY over here, NASDAQ futures here, QQQ over here. Don't merge them. If you merge them, it just kind of says like something that's purely calculated in futures is going to be static for futures. And it's its own independent market. So even though they both loosely track the same thing, they have their independent supply and demand. So I wouldn't want to blend them because somebody could go buy a bunch of futures and not buy SPY. Right? So I don't care that I try to match SPY to that. I want to see futures independently, just on a technical basis. Then I want to see the ETF. I want to treat them like they're two separate entities. I want to treat them like I'm looking at the light side and the dark side of the moon. I want to see them independently because I'm going to look for evidence of the SPX from both futures and equity side. I want to stare purely at futures to get one side of the market and supply and demand. I will look at purely equities, look at the other side, And I don't want to merge. I don't like to merge the two philosophies. Blended chart would only make sense for mobile app. That's the only reason I'm doing it. If you're on a screen like this and you don't put the features side by side from the SPY, you're making your job harder for yourself. But in a mobile app, you only get one screen to play with. Okay, then clearly you have to have it blended. I was talking to my team about it. Everyone in my team agrees the same way. They're like, blended chart's stupid. It's people are going to come in here and be like, why is hedge pressure moving around? I don't get it. Why does it move around for S&P and not move around for SPY? And then it requires us to make a video to train you on an extra step. So imagine an arbitrary thing we create to make it simpler for 2 or 3% of you. 97% of you have an extra step in your education. We almost said we're not going to do it. You know what I'm saying? Schoolboy NQ. Y'all love his name, man. Convoluted spaghetti bowl. It's to like add complexity and an extra step. Reminds me of Rick and Morty, right? It sounds like complexity or it sounds like trading just with extra steps. We'll have to introduce an extra step you didn't know it was there and then teach you how to avoid the extra step we gave you. Right? Like, here's a unnecessary hurdle. And here's how you can avoid it. We didn't have to put the hurdle there to begin with. So an extra training video was like, well, that's less efficient. As an engineer, we want everything to be efficient. So it's like, I don't want to do it. And then everyone was like, yeah, but what about when we have a mobile app? Is there any time when people are not going to be able to put two charts side by side? Well, the mobile app. Well, that's years away, probably. I had somebody say they wanted to volunteer to make a mobile app. This is what I love about my community. Somebody came to me and said, hey, I'm a programmer with this many years of experience and I'm kind of bored and I want to help you guys make a mobile app. Don't charge me. I need a passion project. I'm bored out of my freaking mind. I was like, send me your credentials. And they're like, I'll help you build the framework of the mobile app for free. I fucking love Rocket Skier community. You guys are great. I'm serious. People, I was like, I mean, I'd love to pay you. It's not in the budget right now to go out there and hire a development team to develop something. No, I don't want to get paid. I just say that I did this and I helped you guys. And while y'all are building out futures and everything else, I'll build some framework and, you know, get you guys going, convert everything and help out. I was like, I love this community. He said, y'all are building the next big thing. How cool would it be for me to say, you know, like, I'm helping out, you know, I just love what y'all are doing and be fun. So we might get started pretty soon if we go that route. But that would be the idea, is that if you're forced to have one screen, if it's a computer screen, just put the charts side by side. As a matter of fact, we're going to have it default that way. If you type in a futures chart, it should split two charts, basically. So, like, I want to have it default where you see them side by side. To explain the dancing thing like I just did, by the way, SPY tracks the SPX, has its own independent supply and demand. So it can go up and down regardless of what anything else does. Futures, same thing. Its own supply and demand, loosely tracks the SPX and does what it's going to do, but also has its own independent supply and demand. They both have different meanings as well. SPY is just an ETF. An ETF is rebalanced every day with the balancing act in the equities market. Futures tries to predict the price of the thing at a point in time in the future. SPY doesn't do that. SPY doesn't try to estimate the value of the SPX at the maturity of futures contracts on the expiration date. Like future contracts are, this is the price at a point in time, the spot price will be. They both have different values, different meanings for their values as well, but both are also influenced by the greater stock market because they loosely track it when there's no trading. They strongly track it. So loosely tracking means like its own supply and demand. I can go out there and dump all millions of shares of SPY and not do anything to stocks, and the stock market will stay flat, SPX will stay flat, and SPY will dip a little bit. That's what makes that little fraction dance around. Because sometimes a hedge fund doesn't own any stock, they may only own SPY. Sometimes a hedge fund will only own SPX options and own a bunch of stock. People own all different things and behave differently in each independent thing. So treating it like it's independent is the smart way to go. To have to teach people that is like, oh, that makes sense. Which is cool because I do want to teach people that. We teach people everything here, but it's in the extras, right? Like the dancing phenomenon would be a video in extras. which would be like at the end of the classes. So it'd be like a harder thing to say, by the way, here's how you get started. Understand that these are moving targets. They're not really moving targets, but and it's an artifact of the blending process. And like, oh, okay, well, what's that all about? Well, I don't want to deviate you away from learning risk management out the door. So that was why I was a big objection point to blending the charts. I'm going to teach all the videos like you're going to put them side by side. And then at the end of the education, there's like, as a convenience, now that you understand this is futures, this is equities, we created this way for you as a trader to combine them all in one chart, but understand there's a new phenomenon called dancing, when that anytime you convert two independent markets that track each other, clearly they're not going to be equal value ratio. So the value of the converted is going to dance around a little bit, which is why the DD bot tried to explain that phenomenon as a test case. See, we're also really good at testing our market, and we don't tell you when you're our guinea pigs. We don't. I do all kinds of experiments on you without you knowing. Sorry, Dr. Evil laugh, but let's go to the bot. Dancing with myself. I used to experiment on you guys all the time. I did this for a very long time. I used to have the DD bot. I said the conversion. We didn't do this before. People are like, can you give us the converted DD bot? Sure. We use the futures, which is static. We converted it to here. The value of the converting values is only that at the instant of publication. At exactly 4:54 and so many seconds when I posted this, that is the value of this converted value. But it will change. And every morning, somebody said, how come your DD band SPY is different than the one in the conversion channel? And I'm going to prove to you why I was going to pull the plug. You say, but Project Good comes through and all these people, they convert these targets for you to help out. How come these targets that Nick posts, he does the conversion, how come his are slightly different than yours? So I want everybody here, of the people that are left in the stream today, is about to call it. Tell me why his are different than mine. I want everybody to take a guess. And if one or two people get it wrong, that's the reason to not have a blended chart, right? Why, when I post my overnight at 4:45 and he posts at 8:30, are they going to be slightly different, the converted ones? Different time, yeah. His is only good for exactly 8:30. And Nick does this because he anchors it for everybody. Nick knows what he's doing. He's giving everybody a common reference point, and he posted exactly 9:30 for the most part. He's on the dot. But what he says is not explicitly stated here. He lets you know 9:30 a.m. conversions. It's only 4:38:19 at exactly 8:30 when he publishes it. And that's going to dance around every instant after. Do we all understand that? If it's a small range, it's no big deal. But the thing is that in a non-volatile market, it's a small range. It's dancing up and down one to 2 points right now with no volatility, schoolboy. Imagine actual volatile market. The fraction is massive. You get 5 points of variation. It's no longer actionable when it goes out of the range of 1 to 2 points. If you're trying to get a 10-point scalp, because the strike distance between SPY is 1 point, which is roughly equivalent to 10-ish points of the S&P. 1 to 2 points is already losing 20% of your range. It can skew. 10 can become 8 to 12 if it's bouncing around 1 to 2 points, right? A half gap or a redistribution zone of 10, quote unquote, because of a 1 point strike distance, because markets move in intervals of the strike distance. That's why they're set that way. So SPY moves roughly 10-point burps, give or take. And if the 10-point burp becomes 8 to 12 in a non-volatile market, imagine it becoming 3 to 15 in a volatile market. You completely lose your actionability when it's volatile. You won't see it now, as I showed you in the spreadsheet, but it's a little chaotic when the volatility's there, right? VIX being absolute decay, it still bounces around 1 to 2 points. If it's a small range, you're right, no big deal. This is already on a ratio of 10 is already off by 1.3%, 10.13, right? Tomorrow it may open at 10. The next day maybe 10.6, maybe 10.4. It gets big when it's volatile. the supply and demand of each independent supply and demand does get bigger when it's more volatile. So as we observed it, it was kind of like, it's an extra thing we got to teach people, and we'll add it as like an advanced mode thing. Like in your pro trial, you won't have the blended feature. It have to be pro plus, and it would say like what we wanted to do is, and this is gonna be a fun thing. And here's when I made you guys my guinea pigs. I did this for a while, and I just loosely paid attention to how many people were like, "How come your value is different than his?" I swear, 2-3 times a week I'd get a message, and that's all I needed to know. It's like this terrible idea. So we're gonna make it, but we're gonna make sure that you learn everything first. And then I took it off. And when I took it off and we teach the videos to put them side by side, the thing that's gonna be cool is that when you try to add a feature, we're gonna connect our education to the platform. And so if you try to add a feature that requires a hurdle like that, we're gonna forbid you from having it on there until you watch the video. If you try to click show blended, a pop-up will be there and says, "We've noticed you haven't watched the video on this." Our website's gonna have all of our video in an education tree, and you'll need to watch videos sequentially to unlock the other videos. So if you try to do the blended chart, it's gonna force you to go down the educational path, and you can't unlock videos, so you pass the quiz before it, and we're gonna make you watch a video before you unlock it and learn it. So that to me is the solution to that, to gatekeep you being able to do it till I'm confident you've been trained on it. So it's all gonna be automated. So the solution now is just spoiling a little bit of a fun part. We're creating an educational tree in Rocket Scooter. It's gamification kind of thing. It's gonna be like leveling up your character in like Elder Scrolls or something, right? You're gonna walk in, there's gonna be a video, you're gonna have like a bunch of nodes. The nodes, are you a futures trader? Okay, go this way. All right, here's some risk management. Learn that first. Okay, now you can branch out. What do you want to learn next? Scalping, day trading. Okay, cool. Here's a couple more risk management things. Here's the big 3 related to that. And like you can branch out to each one. And then like there's a main path. And every time you pass a video and get through the thing, you'll have a little character that levels up and like gets achievements and stuff. And then like you can say like after you get a certain amount of points, you can spend it on things. Hey, let me buy a hat. Hey, let me buy a 5% discount on my membership. Hey, let me buy like a steak dinner with Matt. Let me, there'll be like prizes as you finish the videos. And there's going to be some extras that you can't do. That we won't let you use the feature. It'll make you watch the video and then pass a quiz and then unlock the feature, like the blended chart. Do you guys like that idea, schoolboy? So now we thought of everything, right? So as you see, when you're joining like our community, it's not just like, here's an indicator. We think of everything, the experience, the user effect. Bro, Ben's gonna watch every fucking video so I can take his ass out to dinner every night. You know it. I'll have steak dinner with everybody who finishes the educational program. Y'all come out to Houston, I'll take you out. I'll wine and dine you guys and girls. Barb's gonna bring over her cats for a play date with our cats. Just come on over. Let's do it. Some samosa. Karan knows Indian food is my favorite food. Indo-Pak is like my favorite of all foods, by the way. I'll go eat some samosa. I'll go eat some biryani. You'll take me. I'll go eat whatever. My Cajun palate loves some spicy stuff. So you'll take me out for anything good. I'll go eat with any of y'all. So the idea was that we want to make sure that we don't just create the most substantial trading platform and indicators on the planet. We make sure that we create the most substantial education, the most engaged education. We stare at metrics. We do little tests. We have debates like, how are we going to do the blended chart? Okay, well, let's create a sensitivity transform so that it only updates on a frequency. We have to train people on that. So it's an extra degree of freedom because we have to teach people, hey, we added a hurdle for you to blend everything on one chart so you can save real estate. But everyone has a screen when they're trading at home. So really this only applies if you're gonna put it all on one chart. For the mobile app, it's probably better to put them side by side. Hey, here's a hurdle. But you wouldn't even know what hedge pressure was, and we're already teaching you how it dances around. It's like, that makes learning hard. So we looked at the degrees of freedom. Hello, engineering school, like we always do. And it's an extra variable. It's an extra path. And so then we came out with the idea is we're going to create optional indications and display features. and that you can't use some of them until you've been trained on them. And if you try to click the button, a pop-up will say, watch this video to unlock this feature. The next release of Rocket Scooter, I've already tested out. It's badass. This thing called Connections. You're going to be able to connect your Discord to Rocket Scooter. Rocket Scooter will also send you a Discord message with that same thing. Hey, by the way, we noticed that you tried to use this feature that you're not trained on. We know that because your Discord account's connected to your Rocket Scooter account. So it sends you a DM and lets you know, here's the link to the video, by the way, and it'll link you back to the website. This is a reminder. So we sit here like the engineers at Apple trying to figure out a way to make the round corners so perfectly fucking rounded that it's an experience, it's an aesthetic thing, it's an engineering thing. Like we so detail oriented here. This is what makes us me. This is my favorite job I've ever had. People that work for this company are all. It feels like working at Google here. And this is like genius to the max of all the people here. Come up with little ideas, like little tiny things like that. So that not only make trading more palatable for retail traders, it obviously gives substantial information, but even make the experience worth it, right? You always know the story when Apple, when they designed the iPhone, Steve Jobs kept kicking back the idea of the box. Him and his team said that when you open the box, it should be like Indiana Jones. You know, you open something slowly, it's a reveal. They designed the box with a certain gap between the top and bottom side of the box. You turn the box upside down. Apple boxes all do the same thing. There's an outer box, and it's made with a very thick cardboard, which makes it feel like you're opening a tomb, like something like really big. And there's a tiny little air gap. It's engineered to a perfect rigidity. That's why there's a thick cardboard, so it doesn't get bent. And when you try to pull that box, it creates a choked flow situation. Anyone that's an engineer knows that a choked flow means your pressure drop changes. Bernoulli's equation states that velocity is a function of pressure drop to a degree that the flow is not choked. And flow choked means you can reduce the pressure as much as you want, and the flow stays the same. You like go through a nozzle, the flow stays the same when it chokes. So essentially, no matter how hard you pull, it only opens a certain velocity. So a strong person or a weak person can pull those two parts of the box away from each other, and it'll only open at the same experience for everybody. They engineered the experience of opening the box to be the same for every person. You open the box, you had that same exact amount of time it takes to open the box. Pull it slow, pull it fast, the flow is choked, and only opens at a certain degree. So you're unveiling your new phone, and it's charged, and you turn it on, it works. It's like they engineered the box as much as they engineered the phone. To me, I was like, I want to run a company that's like that. How fun is that, right? Did you open that shit like it's fucking Indiana Jones revealing like Temple of Doom? You're opening it up and there's like a glowing artifact inside of it, right? To me, I thought that's when you master your craft of perfection, your engineering, the experience of opening the box. To me, what a beautiful thing to commit your life to. Engineering an experience for people is like a D&D dungeon master who crafts an experience for the people playing the game. If you play Dungeons & Dragons with your friends, right? A storyteller crafting experience of a book. Every little word is a feeling and an evocation of something you want to represent. Like, how cool is it that I'm writing a book. I'm making you feel something through, learning trading. Like, I feel like that's my way of throwing my creative side into my applications in life. It's fun. So ideally, like, we want to always make sure that you have an experience that optimizes every little detail, like is fewer degrees of freedom, easier hurdle. And then that was the outcome of that was, well, how about we gatekeep what people can use, advanced they must trade. Okay, you can't use this feature until you've watched the video on hedge pressure first and watch the video on resilience first and all that. And then you watch the video on why they're blended and how to blend the charts. Okay, what if you want to turn on redistribution zone? It's like, hey, watch that video first. We're not going to gatekeep everything, but we're gonna gatekeep a lot of the advanced features so that you know what they are. So we're like, oh, what a cool idea. So that's, to me, is going to be the answer to that. Imagine a platform not letting you use all the features till it forces you to watch a video on it. And then the video directs you back to the platform and walks you through it. Okay, now click the button. Okay, now go here. Now watch. See how it moves around? Click here to add 2 charts side by side. Click here to experience the blended version. And then you get to choose, and then it sets a default for you. That's what we're building. Yeah, the Apple box. To me, that was something that always felt neat. And every time I get an Apple product, I always tell Nicole, and she's like, "Oh, is that the same story?" She's like, "Yeah, you love telling that story." I'm like, "I know." I'm so inspired. My favorite movies actually these days are like the biopics of people that make stuff. Like people hate the Ashton Kutcher Steve Jobs movie, but I actually like that movie. Although I don't think it should be called Jobs. I think that movie should just be called Apple. You should call it AAPL. It's more like the history of Apple than it is the history of Jobs. The other Steve Jobs movie was actually better about Steve Jobs, but I like movies like that. I like the Founder with Michael Keaton, about Ray Kroc. I like stories about people who build stuff. Like I like all the stories of the big movers, shakers, and titans of industry. Like how Heinz made his ketchup. Yeah, I love that story. How Kellogg and Post were in the cereal wars back in the day. Love that story. John Pemberton and Coca-Cola. I study people who invent and shake and move things. I know all the stories. How Milton Hershey and Mars, their whole saga. These are things I want everyone to go look at and check out. They're fun stories to see how the different titans created their stuff. I love them. Hershey, by the way, you know Hershey chocolate's kind of sour, right? Because Milton Hershey didn't know how to make chocolate. He tried to make Belgian style chocolate with milk in it, and then he would cook it with the milk, and it would make the milk go sour. And Hershey chocolate would have spoiled milk in it. That's why it tasted sour. And then when FDA said you can't sell spoiled milk to people, then they have to add an acid to the chocolate to make it still have its sour flavor that gives Hershey its distinct flavor. Because he used to spoil the milk because he wasn't a chef. He didn't know what he was doing. Like, I love watching the stories of like how things came about. Heinz in his kitchen boiling up different kinds of ketchup to get that perfect recipe. The Men Who Built America. That was a cool series. Yeah, that was like telling those type of stories. I remember. I love that. That was a good series on. I think it was on Netflix. There's also a Company Man. It's a guy I follow on YouTube. Company Man, and he goes to like the history of companies, how they rise, how they fall. That's really fun too. I'm just inspired by people who just want to make something big, and that's always fun. So if you're a dreamer and you want to make something big, we're like I said, we're looking to expand very rapidly this year. And I asked people to send me resumes for a affiliate marketing director. We're actually doing like later this year, we might expand very quickly. And like we'll be hiring like people that want to do something like that. You want to work for the Google of trading? I'm not that terrible of a boss. It's setting the path because you connect. Boss said, damn, you know about biryani? Bro, listen, let me tell you. There's a place, there are 2 restaurants in Houston. Houston, by far, if you guys don't know this, no offense, New York, no offense anyone else, Vegas. Houston's the top food city in the country now. It's been that way for a while. Houston, the most diverse city right now. I think in the diversity, we pass up New York. But Houston is the restaurant capital of America now. It is half the reason I would never leave. Every chef has come here to open up a place. It is by far the most. There is we have Chinatown, we have Little India, we have Koreatown, we call them different. There's like sections and pockets of Houston. They're completely like just walking into the other country. Like if you walk into Little India over there is what just kind of everyone's nicknames for stuff. And all the Asian population, they call it Chinatown, even though it's not really Chinese influence. It's actually it's a huge Asian metropolis own. It's like all the countries and ones. There's like, as Nicole's Vietnamese, so she loves Vietnamese food. There's all kind of Vietnamese, Chinese, you name it, Mongolian. There's all kind of, and it's just thousands of restaurants and shops. You just feel like you're walking into another country. It's so cool. So there's no lack of amazing Indian food by Indian families who moved here and set up like restaurants like the Old Town. We got so much Indian food. We have all different regions of India. We've got north and south and east and west. They're all different, and there's so many different variations. It's not like in Chinatown. It's not American Chinese food. It's not like meat swimming in syrup, like Panda Express. It's like literally authentic from different places and different regions, and I love that. And you can eat so much food. So biryani, by the way, there's 2 places in Houston. There's a place called Himalaya, and Himalaya by far is the best Indian food I've ever had anywhere. Agaz is my favorite. It's like Indo-Pak. It's like a combination of Indian and Pakistani, and it's like just dynamite. You can't. Pho is life, dude. I had pho yesterday. We went out clubbing on Friday, and every time we go out to a club, we don't, we all, Nicole and I both crave soup. Next day, you're just just kind of like sleeping off the tequila, and then you wake up and eat a nice hot bowl of pho. Ooh, so good. Huge Vietnamese population in Houston. Oh, absolutely. There's like a whole size of a small city of just Vietnamese businesses, and like the street signs are in Vietnamese. They're not even in English. And that's what I love about Houston. So just like it's like you can travel without having to go far. And the food is just dynamite everywhere here. But yeah, dude, the goat biryani over at Himalaya is like award winning, man. They grind the spices in house. They don't buy like pre-packed spices. They literally grind it. You walk in, you just get like this bird. You could smell those spices in the air. It like is just such a cool experience. It's so fragrant in that restaurant. Oh, yeah. You used to live in Queens, which is very diverse. Oh, dude, I've been to Queens so many times. 100%. It's what I like, man. I'm such an Epicurean of like everything. I love just disappearing, going somewhere where I don't know anything, and just letting the locals teach me. Very Anthony Bourdain. It's like been a hero of mine. Like walk up to somebody, meet them on the street, and be like, "Hey, I'm hungry. Can I come home with you? And you just cook dinner for me and let me hang out in your living room." Like that's what I would do. It's my inspiration in life is people. What's my death row meal? Yeah, rip, dude. Fucking. You read any of his books? You could hear it in his voice. He was deep in his head for sure. He dealt with a lot. Always want to visit Houston. Remember when Anthony Bourdain did a show there? It looked amazing. It's cool. Like honestly, it's like if you come to Houston, there's nothing else to do but eat. Like I always talk about it. It's kind of funny because my friends come from out of the country, like, "Hey, I'm coming to Houston. What's there to do?" And I'm like, "I don't fucking know." I go to Chicago, and it's like, "Oh yeah, go to Michigan Avenue and go to the Bean and do all these things, and you got all these tourist things you can do and take pictures." Houston got nothing. No, we have an amazing nightclub scene if you like to go out. We have amazing restaurant scene if you like to eat dinner. It's really not like a touristy hotspot of Houston. We got great everything. We got a great zoo, great museums, great whatever. But there's like, I always tell people, you come to Houston, just line up a bunch of restaurants and go eat. And that's the best part about coming here. And I always direct people like, "Where do you want to go?" I say, "Go to Chinatown." That's a cool experience. It's different than the feel of one in New York. Definitely different. And it feels less touristy in Houston. It really feels like in you go. I mean, in New York, you go there, it feels like touristy. Like, it's catering to tourists. That's what the business do. Here, it's catering to locals, to a huge population of people. It's just like family businesses serving their own communities. So it doesn't feel like you're walking down the street and you're getting hounded by people trying to sell you like, stuff and whatever. You're really just walking mom and pop shop to mom and pop shop, and it's more like being in the actual country than being in like a touristy version of it, which that's why I like about Houston's experience in all the areas. You go to, they call it Little India or Little Bombay, the different names everyone gives it. But when I was an engineer, clearly being a Louisiana background, my family's from Louisiana, Cajun. I love spicy food. I love different kinds of foods. I'm an engineer, and as you know, engineering is one of those, like, some of the top engineering. So, like, all my friends when I went to work were like from everywhere. Like, everyone's from India, Mexico, Pakistani, China, Korea. Everyone's from everywhere. So when we go out to lunch, everyone's like, "Hey, let's go here." And I would just taken all these different places. With all my friends I worked with, because they were from all kind of backgrounds. Which in an engineering school as well, I got introduced to all kind of foods. And I grew up kind of like just eating, regular, boring, Texas stuff. We didn't really have like a regular, like, plain, like, just didn't. And so when I went to school and I got always like, oh my god, there's all these amazing foods out there, wow. So I got hooked. In college, when I first got my first job as engineer, we were not far away from Little India, and we'd go over there all the time. And there was like little buffets. You go get your $20, all you can eat, name it, and like get your mango ice cream at the end of it. Like, I was like, oh man, this is so great. You worked for Kellogg's for 4 years? Oh no, what'd you do there? Flushing, Queens, kind of look like being in China. Oh yeah. Trying to do intermittent fasting, you're not helping. Oh, my bad, bro. I'm like totally making you hungry. You want to experience try Cuba Libre in Philly? Okay. It's like walking 1950 Savannah. Let me know if you're up to. Dude, that sounds fun, actually. I need to take a Philly trip. It's been a while. But yeah, if you guys ever come to Houston, let me know. I'll take you guys to eat. We went out to eat. Every week we go out to a brand new restaurant. And I feel like there's just so many cool things. And it's not just like the cultural experience. It's like chefs are coming here with concepts. So we get all kind of weird restaurant concepts, restaurant club hybrids. It's Houston's becoming very Miami-like and very Vegas-like with its restaurants and clubs. A little different. So you see, I took my long, very small, didn't lose a lot. I stopped down, we lost hedge pressure. Now I stayed out, right? That's kind of how it works when you're trading. I didn't trade big, didn't lose much. What's mean reversion? It just means middle, Simon. It's not really bullish or bearish. You only visited NOLA once and loved it. One of the most unique places I've ever been to. Unique for America. A melting pot. Dude, NOLA is great. I go to New Orleans just for restaurants as well. It's like a lot like Houston. When you go to New Orleans, you have to go for eating. Like, if your tolerance for like craziness is okay, you might want to do the Bourbon Street thing once in your life. It's a very crazy place. Party on Bourbon Street certainly is an experience. But if you want to just to go and do some like cultural stuff, dude, you hit up all the restaurants. Like, you can pick a chef and plan a trip. You like John Besh, make a trip and just hit up all of his restaurants. He's got like a dozen of them. You could literally just go and just restaurant trip. I go all the time just to eat, and there's a ton of good restaurants there. Even the classic ones like Commander's Palace, and you get the world famous turtle soup there. And NOLA's a great place for food, just like Houston, same thing. It's all about the Houston Eats, baby. You take people to the Manil. Dude, the Manil is great. Now, that's where I like to take people if they come. The Manil is the world's largest private art collection, and it's turned into a museum. The Manil and the Rothko Chapel, pretty cool trip. Breweries, restaurants. We've got, like 40 breweries now. Literally like 40. They pop up so fast. They're everywhere. You can't even take people to the observation level at the Chase building anymore. Oh, that's actually fun. I didn't know you could do that, to go tour the building. Was that like because of COVID or something? Yeah, Chase Manhattan building's a big, tall building in Sketcher in Houston. Confirm when your favorite boss there from NOLA. He worked in the first season of True Detective and Dreamlike. Oh, nice, dude. Just turn into that. I guess meaner versions either way. Yeah, meaner versions either way. Like I said, I wasn't too eager about taking a strong long, and I tried, it didn't work, and then I'm just kind of sitting out. you know, just let the market do its thing today. It's not really a strong signal either way anymore. Try to make a break, something pivoted slower, and it's going to stay out of it, right? So I'm basically just chatting some done. Yeah, so in mean reversion is not a day trade day. It's like, this is where the risk is bull or bear. Hedge if you're in something. Oh, shoot, my phone died. This makes it quiet. So back to the story of my favorite. I actually make probably one of the best tiki masalas you ever had. It's probably not as good as your grandma's, but I make hella good tiki masala from scratch. I do like me some goat biryani. That's one of my go-tos. So I know. Okay, that's it today. Really nothing else to go for. Sorry I made you all hungry talking about lunch. I'm gonna go get me some food right now. Open in bear zone, back in bear zone, made a press. Even so, like normally when you trade out of bear zone and DD is positive, there you can see that on the cheat sheets. It'll show you this, right? This is typically what you look for. The cheat sheets are here in the Discord and platform tutorials. When you do have that, DD ratio is bullish. Let's go to the cheat sheet here. Irrational greater than 0.6, check. It's 0.77. Open here. Bull zone tap only, back to bear zone is more likely to close in the zone it opened in, and that's exactly what happened. And again, me taking a small long on the breakout case is the rare case. It's very rare that you break out from bear to bull side, so that's why I take a very small position on the very low likelihood of that happening, because if I'm wrong, then I'm wrong small, and that's it. That cheat sheet, right on point, just like it is. Red lights have me trade small, and that's it. Small loss, not a big deal. And again, risk management. Quantified here in these little alerts. I love it. Okay, if you want to get into the Pro Plus, let me know. Again, send me a message right now. See, I look like I missed the pop-up, or I need to get in Pro Plus. I want to be able to get into futures. How do I do it? I will show you the way. Love it. Love having these cheat sheets. These are making it very easy for me to reference stuff on the screen. Make sure you download them all. Check a look at all of them. We're making one for all the different tools and techniques we have. And of course, stick around as I come up with all kind of new neat features. Futures coming out in about a week or two for me to test out on the test server. That can be fun. Have something to play with. Be able to connect your Discord to Rocket Secure and other very awesome features coming out in the world's most innovative and revolutionary platform. Future of market analysis is here. We share where dealers are positioned and much, much, much more. So thank you for tuning in and being part of this amazing revolution, traders. I'm gonna give me some Indian food. I made myself hungry. I love you all. We'll see y'all later.